You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It is August 4th, 2021. Well, hey, we got a very complacent precious metals market now. It seems to have been forgotten yet again, and so too the mining stock sector. And yet the profits are moving on. M&A activity is definitely picking up. What is the cause of this complacency? Everybody's in cryptos, cannabis. What is going on here? Well, let's find out from Junior Miner Junkies, David Erfle. David, welcome back. Hey, if you got a question for David, shoot me an email to kl@kerrylutz.com. David, it's great as always to talk to you. So I was expecting perhaps mistakenly, a summer bump like we had the past 2 years in precious metals. And yet now it's just Yawnsville out there. It's, hey, I'm on my vacation that I missed last summer. I'm getting it now, and I'm just not thinking about the sector.
Yeah, that's it, Kerry. Thanks again for having me on. Always great to talk to you. Yeah, I mean, that's it. I mean, in my column last month, I wrote about, I think it was end of June, maybe beginning of July, I wrote about the summer doldrums returning after being on a 2-year hiatus. I mean, a lot of people that are new to this sector, they need to understand that normally at this time of year, volume dries up, people go on vacation. There's not a lot of news releases in the junior sector, and people become apathetic, and they just kind of walk away from the sector for a while. And this year, if they're doing that in spades, as for the past 15, 16 months, everybody's been locked up and they haven't been able to take a vacation. So now everybody's on vacation. And in the meantime, equity markets just keep making all-time highs, while you've had the gold sector been consolidating its huge gains that it made in up to 2020 for the past year. So as these stocks continue to just slowly go down in Chinese water torture-like fashion, while equities continue to go higher, you're having people taking tax losses on these junior gold stocks already in July and August. So it makes sense that what's happening here in the sector based on all those things I just mentioned. But it also makes sense to have a watch list right now that you've vetted, that you've done a lot of research on. You know, you talk to these companies one-on-one, and you get as much information as you can with them. And also, these companies have done a great job in cashing up after their share prices went up, 5, 6, 7, 8 times in 2020 in the matter of 4 or 5 months. So, we've got a really great opportunity here to take advantage of the apathy taking place in this gold sector right now. I mean, I'm seeing a lot of value right here in a lot of these juniors that I follow and that I own, and it's just a great time to start nibbling at these things. I'm not saying go all in, because absolutely we could have one more leg down in the gold market. It could easily go down to that 1550, 1600 level. That could easily take place. I'm not expecting that, but you have to plan for it just in case. But I mean, nibbling down here at some of these juniors that have been being thrown away with the junior lifestyle company bathwater. Yeah. It's a great time to get involved in this sector.
Yeah, I love that. Hey, well, you know what I always say about? I don't care about apathy. So, but yeah, investor sentiment, though, that I do care about. And it's a sentiment play at this point. And if it's one thing we know about our sector here, is the contrarians are always the ones that win in the long run, especially when they've been beaten back. Not a lot here. Like you said, pre-call, If they stay above 17, price of gold stays above 1750, probably that's going to be the bottom.
I think so, yeah. But if you take a look at the juniors, they really started to show strong relative weakness after the Fed came out and pretty much jawboned the fact that, not the fact, but the idea that inflation is transitory and we may be tapering sometime soon. Well, they came out on their last meeting and basically said, look, we're not tapering and we're not raising rates anytime soon, because now they've basically said we're not going to taper until we raise rates. And now we're not going to raise rates until at least the end of 2023, which is quite a ways away. So if you take a look at what the gold price has done after that, it's still remained in this range between like 1790 and about 1835. And there's, like I said, there's just not a lot of interest right now in the sector with the gold, with the equity market continuing to decline. So, history shows in this sector that people love to get into this sector for multi-bagger gains, right? I mean, that's why we're here. All it takes is a few of these stocks in your portfolio to go up 7, 8, 9 times, and you're doing really well. And the only way to do that is to buy in environments like this, when investors are throwing away their good shares right now, they're good juniors, because they messed up on their entry point. They're not selling it because they think it's a bad company. They're selling it because they messed up on their entry point. They figured that it was going to bottom at a certain point. It didn't bottom at that certain point. They're down 25, 30% on it. They're going to take a tax loss now on it, and they're going to get back into it in a month. That's what the law is. After you sell something for tax loss, you can't get back into it until 30 days later in order to claim that loss as a tax loss. So That's typically what happens in this sector. And it usually bottoms around this time, late July, early August, when the summer doldrums take place in this sector. We usually have a tradable bottom. And I think that's taking place right now. If you take a look at the GDXJ, it's formed something called a bullish island reversal on the daily chart pattern, where you had a gap down and you had some trading, and then you had a gap up. And I don't know if that's going to hold. I mean, it could, it may not, but I am also seeing a lot of these juniors showing that they're sold out and they're trading on low volume. So it remains to be seen whether that bottom holds. And if it doesn't, there's more support, long-term support on the GDXJ at 41. It's double bottomed at 43 here now on the weekly chart, and there's long-term support at 41. That could still take place. I think that's probably the downside maximum in case the gold price reverses again here.
So double bottom's usually a bullish signal, isn't it?
Yes, I mean, it's funny. Speaking about double bottoms, the U.S. dollar, which the gold price has been tracking mostly lately, made a double bottom at I think the 89 area, and it's recently made a double top. So the gold price is basically wondering what's going to happen here, what's going to take place. Is the double bottom in the dollar going to hold? The double top gonna send the dollar back down and break that double bottom, or will the dollar turn around and go higher again if the stock market starts to roll over and people start to get scared and go into the dollar for some safety? I think that's a big catalyst for the dollar going higher if that takes place. There's the marketplace is littered with analysts and big time investors that have been trying to short the equity market and have lost. I mean, I don't have enough fingers to count how many times people have called a top in the equity market, and it just keeps going higher. So it remains to be seen how that takes place. But I think once the stock market does roll over, that'll bring more interest into the gold space as well, especially the junior space.
Hey, our good friend Martin Armstrong has been spot on. I mean, time frame wise hasn't worked as he said, but many years ago when I got into this business, I think the Dow is trading at 16,000, and I have headlines: Dow 35,000, Dow 25,000, Dow 42,000. And, he's the only one who's gone out on a limb and actually said these numbers, and he's been right. Timing wise, well, they always say there's two things. You could be right about the time, or you could be right about the market, but don't try to predict both, because then, that's when you're at most risk. Well, he's been wrong about the timing, but he certainly has been right about the market. And David, how long has it been since we've seen a bear market in stocks?
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Oh, it's been quite a while. I think it's 13 years now that this bull market has gone on. I think it is the longest bull market in history. And as Armstrong says, it's all about capital flows. Everybody that's predicting the stock market's going to crash, the capital has to go somewhere. Where's it going to go? Bond market? I really don't think so. Even though it's overvalued and by any metric that you want to use historically, it's overvalued, but it's the place to be as the Fed continues to buy 120 billion in QE and continuing to leave interest rates at basically zero. And the European Union has continued to leave their rates negative since 2014, and Japan's left their rates negative for the past 20 years. The money is continuing to flow. The rich are going to keep getting richer, and the poor are going to keep getting poorer. And ever since this COVID-19 catastrophe has taken place and changed all of us, that gap between the rich and the poor has gotten a lot wider.
Hey, Greg Manarino, he's the one that I saw this actually quoted in Zero Hedge today. He has said for months that as the real economy deteriorates, the stock market goes higher. And, originally when I went to school, they said the stock market is the great discounter, predictor of future economic activity. And now it's become like an inverse indicator of what's really happening in the real economy.
Right. Well, when you went to school, we were on a gold standard.
Yeah,
and we didn't have something called modern monetary theory.
Yeah.
So ever since this modern monetary theory has been put into place, the creation of capital has just increased significantly, and it's got to, all that money's got to go somewhere.
Got to go somewhere, and better in our pockets than theirs, for sure. But it's just that the incentives. There's an article today in Zero Hedge about all these zombie tech companies, and they're outperforming the S&P 3-1. And why is that? That is completely irrational, erratic behavior. But because you have the Fed put, the Greenspan put, it's alive and well. It means that on the riskiest stocks, there's no risk, because they're not going to let them go out of business, because they can basically keep borrowing and paying interest on interest. And I always say, if you've listened to the show for any amount of time, my grandfather had an 8th grade education, but he said, when you're paying interest on interest, you have a problem, just like the U.S. government.
Yeah, yeah, and it's becoming a kind of like 1929, where everybody and his brother, the shoe shine boy, was giving you stock tips and had their money in the market. Now via Robinhood, everybody has a stock market account, and they trade their stocks on their phone as they go, and they put their stimulus checks into it, and it's gotten crazy. The speculation has just gotten out of control.
Hey, well, to update Benjamin Graham's saying, he said, when the elevator operator and the boot black, that's what they call the shoe shine boy, when they're giving stock tips, it's time to head for the exit. Now it's when the Uber driver or the pole dance instructor is giving you crypto tips, you need to get to the exit, right?
Yeah, exactly. Yeah, when you see Bitcoin go from $65,000 to $30,000 in a month, I mean, that's not a store of value.
Yeah, that's hey, but people still tell me they use my show as a contrary indicator to buy cryptos. It's like, I'm not anti-crypto. I have a small crypto portfolio just for the fun of it more than anything. It'd be fun to make millions off of it, don't get me wrong, but I don't have such glorious expectations. And I kind of I'm on auto purchase. Now there's a thing, I don't know if you saw it, you can round up, like there was a thing called Acorns, and it basically, all your purchases, it rounds them up and then automatically deducts that money from your bank account and puts it into like ETFs and funds. But now you can round up and put it into cryptos. So, it's like originally the roundup was like going from 95 cents to $1. So it was a nickel. Now they got $10 roundups. So you buy a latte at Starbucks for $5 and it rounds it off to $10. So every time you buy a latte, you're buying $5 of crypto. It just doesn't sound like it's going to end well to me.
No, it certainly doesn't. Yeah, that's not putting a lot of thought into your investments, is it?
Hey, buy a latte and buy $5 worth of crypto while you're at it. It makes it real easy, doesn't it?
Yeah, absolutely. Yeah, sure does.
Yeah. So what will be the sign that things have turned around and we're going to see the rally in the sector? And is it probably going to be in end of Q4, beginning of Q1, like we've come to expect, or because I'm asking you several questions here at once, apologies, or is it going to be because the tax loss selling happens earlier in the year? We'll see that rally even earlier in Q4.
Well, I think you're good. You see, these stocks don't bottom all at the same time. Many of my stocks have bottomed already. And a matter of fact, 2 of them made 52-week highs last week, 2 juniors that I hold. So you have to take each stock as a per situation basis. For example, a lot of these juniors, they went up. There's one that I recommended to my subscribers this week that had 2 7x moves since 2016. And the first move came off in about a year, something like that. And it erased almost all the gains. And then the second time it took place was in the 2020 run up. And in 4 months, it went up 7 times. But ever since that took place, the stock, it's been coming off, it's been consolidating those gains. And that's what a lot of these juniors do. They take the elevator up and they take the slow stairs down, but the company's done all the right things while the share price has been going down. They've raised money at the right time. They're getting great drill results out of their district scale size properties. And also the management continues to buy shares in the open market and in placements on the way down. So there's nothing wrong with the stock. It's just the price just got way overvalued in a short period of time, and the move has to come off. That situation is taking place in many quality juniors across the board. When 2020 happened, that was the elevator down and then the elevator up. It took the elevator down because everybody was panicking, not knowing what was going to happen as the whole world, the Western world, was locking down. So, and also on top of that, at that time, juniors still needed to raise money. So you had a combination of panic going on in the junior space, along with the fact that none of them had any money. So, I mean, these juniors, they consume capital. And so it's death to them when they don't have any and they need it. They got to raise money at a low price and dilute the hell out of their stock. So that isn't taking place now. We've had a slow decline down. And during that slow decline down, we've had capital markets remain extremely accommodative, and all these quality juniors have cashed up. So their prices are getting really, really attractive here for the next move higher if the gold price cooperates. So I think once the gold price gets above 1950, that's going to be a trigger for a lot of the juniors to really start taking off.
Hey, and to me, that was one of the indicators that the market had basically gone too far too fast, that every decent junior, quality junior with real prospects was cashed up to the hilts. They all, in a short period of time, they were all able to get $5-10 million each, finance their drilling 1, 2, even 3 years out. That to me was a sign that the market had gotten too hot, gone up too fast, and was due for consolidation. And we've been in a 1-year sideways consolidation move here with gold. I mean, August 8th, was it, of 2020 was when it hit its all-time peak. And now it's been just kind of floating sideways, making that consolidation move. Mm-hmm. And we know from past bull markets that really it's a positive sign, not a negative sign. Oh,
absolutely. I mean, you take a step back and let's look at the big picture. I mean, gold doubled in price from its late 2015 low to mid 2020 high, from $1,050 to roughly $2,100. That's a double. That's a huge move. And the gold price has only corrected 20% since it made that top. That's not a lot. So, exactly. I mean, even if it does come down to test that 1,550, 1,600 area, it's still in a bull market. And a lot more of the froth will have come off the gold price. I mean, if the gold price would have turned around and not had this long consolidation and gone on to 2,400 in a short amount of time, the correction after that would have been brutal. So this is all healthy action in the gold price, and it's healthy action in the quality juniors, based on the fact that they made those huge moves in 4.8 months. These juniors made these 7, 8, 9, 10 times moves in a short amount of time. That needs to come off. And that's taking place right now. And it's given people a great opportunity, contrarians that are cashed up, a great opportunity to take your time and vet these companies, do as much research as you can, talk to them, find out how much the ownership owns, what they paid for them, what they've done with the money, all that. Do as much research as you can and take time to scale into a position. I mean, you don't want to buy a full position here just in case. You scale into it. You buy maybe a half position or a 3/4 position and hope that it goes lower. That's the situation you want to be in. You want to hope for the price to go lower during this consolidation period and summer doldrums in the market to get a full position at a really good price. Then you can hold on and wait for the next up leg to take place.
Hey, and that's your margin of safety too, because they're trading depressed, but they haven't collapsed by any stretch. And that's all good. Silver, though, what's going to be with silver? Are we going to see silver follow gold here?
Well, silver, that 25 level is the level to look at as key here. I think it's got to remain above that 20. We had a daily close below it here recently, but it went right back up and it closed the week above $25, because $25 is right around that uptrend line of the multi-month triangle consolidation that it's made since the silver price went from, what was it, $11.50, $12 to $30 in what, 8 months, 7 months? I think a very short amount of time.
Yes.
So that move has to consolidate. So there's really key support at 22. I wouldn't be surprised if silver comes down to test 22 during this consolidation process. But if you take a look at silver juniors, some of them went even higher than gold juniors, 10, 12, 15 times moves. So those need to consolidate. And that's what's happening. And right now, there's just no interest. I mean, It's even difficult to get a large position right now because there's no liquidity in a lot of these stocks.
So true what you're saying, David. That complacency and that indifference, it's worse than, when somebody's indifferent to you, it's much worse than if they're angry at you. You could deal with the anger, but the indifference is really hard to take. But hey, you want to cash in on this indifference, then you got to go over to Junior Miner Junkie. That's JUNKY.com. That's David's site. Check out his editorials, his weekly Kitco columns, must reading, and subscribe if it's what you think. If you think you'll get a benefit from it, which I'm sure that you will. David, always a pleasure. If you got a question for David, myself, the email is kl@kerrylutz.com. Appreciate you coming on, and we will talk to you again real soon.
Always a pleasure, Kerry. Thanks a lot.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.